Okay, I think we are live. I never know exactly when these things. For a second. Okay, I'm back, I think. All right. Ryan, am I there?
Let's
Am I
let's
there?
restart the intro. So
Yeah.
when we clip this for the podcast, we're gonna be okay.
Yeah, I think something happened where it accidentally shut it out there for a second. But yes, this is the Investing Power Hour number 75, live on YouTube. What are we? My name is Brett Schafer. I'm here with Ryan Henderson. We're talking about basically whatever we want in financial markets. I had the week off last week. I was basically off the grid. So maybe, Ryan, we can start out by anything I missed, anything, something like that. But before that, how are you doing? Are you ready to discuss any investing topics this week?
I'm doing well. Yeah, I've got pretty much one thing on the docket. What did you miss? Well, markets are in turmoil. I think the Nasdaq is down like 4%. So
That's this week, right? What about last week?
I honestly just don't remember. Okay, let's
How
see.
was
I'm
the
trying.
show? I listened a little bit to the show last week with um Jason. Does seem to go well.
That was good. Jason's really he's good. He's kind of a banking expert, and so it's always fun to pick his brain on banking topics. And we did a little bit of that. We talked home builders. We talked. It's always refreshing to get a perspective of someone that's not me or you, because we just are like just a thought silo where we just like regurgitate each other's takes. And it's like,
Right.
yeah, houses are overpriced. And it's like someone's
Yeah.
like, yeah, people don't.
Oh
People
yeah.
buy homes and they don't look at it for an investment. Like, well, whatever. But anyway, yeah, it was fun. I don't know if you really missed that much. ARM
What about
is
that? What about that
IPOing.
ESPN? What about that ESPN charter thing? I never really read that up, but I just saw a headline.
Oh, that they're like withholding their rights or whatever.
Yeah.
I didn't read up too much on it. Apparently ESPN's holding out. I guess apparently there's a really good Stratechery article on it. The I guess just a holdout, right? But
I
no,
guess.
I read it isn't about the pricing. It was about Charter being able to offer the ad supported tier or something
Mm-hmm.
for Hulu, Disney Plus, and ESPN Plus
Yeah.
or ESPN. So I don't know why that's the hiccup, but have you read up on it at all?
Just a little bit. It seems though, I don't know what the dispute is going to end up being. I don't like any of the horses in this race, but it seems like this is an opportune time for the Rokus, the Fire TVs, and what's the other one? Apple and Google. I'm forgetting some. Samsung. It's an opportune time for them to try to take the reins here, right? Or try to offer something that a lot of these streamers might want.
Yeah, maybe. I don't know. I mean, I keep going back and forth, which is like ESPN, obviously great brand, but it's not worth anything if they don't have the sports rights. So it's like, I guess Disney is just it's unsolvable. It's uninvestable because I don't know. And remember, last time I said something was uninvestable, Meta jumped like threefold. But it
So
feels
that's
uninvestable
the buy
because I
signal.
can't predict anything with them.
Yeah, it's uninvestable for me. I think if people can get comfortable with it, they can, but I really hate the media industry in all its forms right now. I would invest in a company where it's a small portion of the business, like an Amazon or a Google, but I just think it's too tough. It's too tough. Maybe at the right price, the uncertainty is okay, but man, some of the prices that these things used to trade at, I think that uncertainty was just not, the risk reward was not reflected in that stock price. Maybe it is now, but
Maybe. Other things that happened. Okay, Latch. You remember Latch? Changed their name to Door.com. Thoughts?
Latch is a good name. Door.com, maybe not as much. Maybe not as much. I don't know.
I think
Okay,
a name
door.com.
change.
Wow. I mean, they're a little desperate. They're a little desperate.
I was gonna say a name change that does not mark a change in strategy. So like Facebook going to Meta or whatever, which I still think was stupid, is like, please forget about our previous company. This is a new one. And we are not the same people. And it's like, okay, yeah, forgive our previous mistakes. But anyway, other things that were kind of interesting.
We got a question here from Amir. What about coupon boys? I don't maybe clarify that if you have anything specific on that, but I would disclose that over the last, what was it, 2-3 weeks ago, we actually did end up taking a position. So we're not going to probably buy anything more, sell anything more for a long time, but it is a position we really like the company.
Yeah, no, we did buy it. I don't know. I'm umming a lot this episode, so I'm going to stop umming. But
we'll have to have an counter for you, and then we'll add it up. We'll have some the listeners do a tally, and then it'll really get you going. And try not to say them anymore.
I really like Coupang. We, like Brett said, we took a position, so it's a part of the Arch Capital holding. So keep that in mind. Exclude that.
There's one.
I really like Bomb Suk Kim, and they just feel really advantaged relative to a lot of the other players in South Korea. And South Korea is just, I'm surprised by how good the economics can be there for an end-to-end e-commerce provider.
Yeah.
They're generating, 26% gross margins. And that is up like almost 10 percentage points over the last year. Granted, they had a fulfillment center fire last year, but it's a very profitable market, and it's a model that really works. And similar to Ryanair in a way, Bom Suk Kim seems maniacally focused on building efficiencies within the business, which that's really how you get to operating leverage with e-commerce companies. Is just like redundancy, like this crazy focus on being efficient.
Yep. Little teaser. Ryanair is going to be our not so deep dive for next week. So if you're listening to this on Sunday, as the majority of you are, Tuesday, going to be a fascinating airline to cover. All right.
Have you heard about Dollar General?
Better to sell or hold from Amir? Well, I think that answers the question. We just said that we like it, but obviously don't just buy because we buy, don't hold because we hold, don't sell because we sell. We're just talking on here. And we like the company for the time being, but there could be something that happens, and obviously do your own research. I would, if you like, or if you're interested in it, though, we did do a coverage on the company about maybe, I can't remember. It was this summer. So pretty recent. Check it in your podcast feed or on the YouTube page. But you were saying Dollar General.
Yeah. Have you kept up with this?
I saw the stock was down. What's going on? I thought this was a compounder.
I mean, I think it's still a compounder, but it seems like they're kind of getting hit from all sides. Walmart's starting to encroach a little bit. Keep on me, whatever. The other part is, I think I might try to do like a segment on shrink, which is a common theme among a lot of retailers now. And every CEO on it, pretty much every conference call for any retailer has called it out as a huge headwind, more so than it has been previously. Because I remember Five Below, their CEO was saying, in some of our markets, we just can't even operate anymore. They don't prosecute for theft under $500, which if you're Five Below, most of that theft is going to be under $500. Certain cities just don't. And I think a lot of people get attracted to the shrink topic because it's political, and in a way, like if certain local governments don't prosecute crimes or theft, like shrink's going to be higher there. And so people want to comment on it, but really I'm curious what kind of an impact it has on like actual retailers. Like, what do you do?
I'm curious.
Can't hire police outside the store. Like I remember Nike was trying to do that within their Portland store, and the government, whatever governing body basically just said, no, like you're not gonna be able to do that. So they had to shut down their stores. Do you just fail to operate there? There's no way all these companies are just going to open up stores in Kansas or in the middle of rural America where there isn't that many customers. Is this like, can this be a sustained headwind for multiple years?
Yeah. Yeah. The big question for me is, does it get better or does it get worse? Because if it gets worse, this could really, really hurt the physical retailers, and it's going to help the online operators because they don't have this. Yeah, there is some porch theft that they have to deal with, but it's not nearly as bad as the shrinkage of some of these other stores. We got a comment here from Game. Can't pronounce your last name, but thank you for the comment. But he says, and he just missed a little bit of discussion on it, but what is your thought about Disney at these prices? I
don't like them.
Well, I would get it where I think the parks business can give you good returns without raising too much on prices, right? Because they've taken that a lot and people are getting very, very upset with that. So I would say a margin of safety with the parks business, because that seems like a very solid business. Well, it doesn't seem like it. I think we can all definitively say it's a great business. It just, the video stuff, it's so uncertain. It could be a zero, those entire businesses. I mean, that's a little bit extreme, but I would look at where the parks business is, what I'm buying. And I don't know what number that is, but that's the kind of the math I'd want to do. And it's still not a business I want to own, though, because I just don't like the media industry right now, because big tech is just flooding the market with supply and they don't care about the economics because it's a rounding error to them.
Yeah. And, the people probably hear you say like, oh, it could be a zero or whatever. And they're like, what, how on earth is that possible with the brands that they have? And, those brands are certainly worth something, but
there's fixed costs, a lot of fixed costs.
They are just hemorrhaging money, and they can't do that forever, no matter how much the park subsidize it. So maybe they can just be break even forever. But the streaming market, like you said, it's being flooded with content from people that are not afraid to throw away money. And
Netflix has this big lead. Netflix has this big lead, and YouTube is a giant whale in there as well.
Yeah, this week I streamed plenty of content. It was kind of the long weekend, had some time, and I did not touch anything Disney wise. I watched Apple TV. There's some new shows out on there. I watched Netflix. I watched sports, all streamed by non-Disney assets. It doesn't feel to me as relevant in the media consumption world, the brand, just the whole Disney umbrella. And
we're good.
It's just a different world for them. And I think the changing of how people consume content could be really kind of detrimental to the Disney business. Disney Plus is fine. And I bet if I had kids, I would love Disney Plus. But eventually
it's not a giant
it's
market.
not doing that well. I mean, growth is muted. They're raising prices, which helps, but
and if I was going for the thesis of, okay, families have to dominate this, I would be worried about the competition from Roblox and Nintendo, because they are both doing extremely well with family-friendly content.
A lot of go to Netflix. There's so many kid-friendly content. Go to YouTube. YouTube is probably eating the most share in terms of kids consumption, YouTube and Roblox, over Disney. So I don't like Disney here. I also kind of have a pet peeve with Bob Iger. Is just a walking, he just irks me.
Egomaniac. Yeah. All right. Back to, looks like we got some comments here about the shrink and Dollar General stuff. So maybe I'll throw out these comments. What about, from Brennan here, what about Walmart's new theft detection procedures? And also Julius Caesar, well, thank you, Julius, for joining, says that ASO, who is that? ASO is Academy Sports and Outdoor. Okay. It's pretty much the only retailer that hasn't mentioned shrink as an issue for them. They have a good inventory management control in place. Plus their stores are primarily in the South and Southeast. Maybe that helps. Yeah. I think the big thing, at least the theme from both these comments are, and what I was thinking about when you were mentioning stuff, is that eventually it's going to be such a big problem that these companies are going to make it their number one priority. And I think they're going to solve it when push comes to shove. But things could look ugly for a while.
Yeah. And I wonder how most of it's being done. I'm curious whether it's people walk in and they know they're not going to be convicted, so they just grab stuff and walk right out. I know in Seattle, the city has a big problem with it. Honestly,
My friend was a manager at a Dick's Sporting Goods, and he said it was insane. People would walk in, take it, run out the door, and the cop in the area would be like, hands up. I don't know, man.
Yeah. I had family who worked at, it was like a QFC or something. And they said they would see people walk in that they knew weren't going to pay. And they're not allowed to touch them. They're not allowed to do anything. They're not allowed to follow them out of the store. They could just walk right in and take them out. It's what do they call it? The 5-finger discount. It's
it's interesting. It's interesting how if it's going to get worse and when, like how much it's going to affect these retailers.
And I could see that being a labor issue too. Like if these people start to feel unsafe,
100%,
they're not going to want to work there. I mean, obviously there is general just resentment towards working at retail stores because of that theft issue, at least where I'm our area. So I think it has to, and a lot of the CEOs in conference calls have been clear that they can't solve it themselves and it has to be done at the government level.
Yeah, what's interesting, they might have to just cut their losses and pull out of some of these areas, specifically on Dollar General. I wish I knew the company better. I would say that how I do follow the company is from our sponsor and great friend that has been on the show for a long time, The Science of Hitting newsletter. That's really where I get the coverage from. But besides that, I'm looking at a 10-year chart of their price to earnings ratio, which again, probably isn't perfect, but probably decent for a company like this. And it's at 12.8, which is their lowest in the last 10 years. Maybe it's an opportunity to plug your nose here, but what were the concerns that they had? Did you kind of look at this closely at all?
Not close enough, but there was more than just the shrink issue. It was literal like competitive threats that were causing problems for them, which is a little hard to like look past. So I don't know. There's valid reasons for it, and I recommend everyone look at that Science of Hitting article because he describes the situation well. But feel a little unqualified to discuss it in any depth. I want to answer this question about Walmart's theft detection or theft prevention. I'm not sure what their actual procedures are, but I know every time I've walked into a Walmart recently, there's a cop at the door. I walked into Kroger-based stores recently. There's cops at the door, and they are now doing receipt check for
like Costco.
The other thing that's worth mentioning is Walmart doesn't really operate in cities. They are always outside the city. I know in Seattle, greater Seattle area, there isn't a single Walmart. So that can help prevent a lot of the crime, to be honest. And I think they didn't call out shrink as a percentage of their overall business as such a big headwind relative to some of these other companies.
Yeah, as a Dick's Sporting Goods said, it was really, really tough. Yeah, I don't know retailers that well. I don't know Dollar General that well. I know they have a great book I would love to read sometime. Seems like it's been a great business. I wonder the e-commerce threat with Amazon. Does that ever going to push into them, or are they so rural?
Or like Temu.
Yeah, Temu is the big Dollar General threat. I did see recently, I think I just liked that. I think like 30 minutes ago, there was a short report out on Temu, which will say time to ban them because as Amazon shareholders, we are very worried about our U.S. national security, right? Exactly.
Yeah,
right?
that's we're not
That's
worried
our number one
We're not worried about our position in Amazon. It's national security. This needs to be dealt with, and it would just so happen to coincide with my portfolio.
Exactly. From what I've read about Dollar General is they try to be as rural as possible, right? That's their core bread and butter. They want to be the main store in these tiny towns. So I would think they're insulated from e-commerce, which is nice. But they already have so many stores. I don't know. I guess I don't know the company well enough to comment on it. It seems like it could be an interesting opportunity at like 12 times earnings, especially if they have that solid capital allocation in place. I will look. I believe they're a decent share cannibal. I'll pull up the shares outstanding number here real quick.
How about the Amazon Shopify partnership?
Okay, yeah. As a note, 10 years, that last 10 years, shares outstanding down 31.5%. Ooh, did not see that.
Kind of
Fill
mid.
me in on that. This is when I was off. I was gone.
Oh, they reached some sort of a partnership that I don't think the specifics of the deal were disclosed, or maybe I didn't see everything in particular, but basically Buy with Prime is going to be able to be integrated easily within for Shopify merchants within their checkout process. And previously they had announced that they might integrate this. There was some pushback from the investor community, and then Shopify was like, they're violating our terms of service. I don't think merchants should do this. And if you want to, it's going to be this really complicated like process for you to get it put onto your checkout process. Now they're adding just a simple button. I wonder if Amazon's giving them some sort of a royalty or kickback on orders processed through Buy with Prime.
Yeah, I don't know.
My guess is they probably are, because what would cause this change of heart from Shopify?
I think it's because the merchants are upset. I think this is one where
I'm pretty sure because Toby and Andy Jassy both publicly stated like, oh, we're happy to be doing this partnership, and Amazon hasn't specifically called this out with any other CMS providers or content management systems. I think there's a kickback here to Shopify in some way,
but it's going to be lower than Shop Pay. I think this is one where Andy Jassy is basically Walter White, and he's calling up Bezos, and he's saying the I won thing, right? Yeah, I think so. All right, Ryan's changing his mic, but I think for Shopify's perspective, the most concerning thing is that the economics are not going to be nearly as lucrative as Shop Pay processing through their internal payment system.
Hey, the stock jumped.
Oh, well, I mean, yeah, great.
You know what else was funny? I was remember when Shopify announced that they were buying that
$83 billion mark. Wow. It's still, God, that thing is still expensive. Sorry.
Okay. Remember they bought that last mile delivery company, and the stock jumped. And then like a year later they sold it and the stock jumped.
Yeah. No, it's Shopify is almost like Apple. When Apple reports an earnings, all they have to do is report earnings. They don't have to be good. The stock will jump. They're like, okay, the earnings are out. We can buy this thing. Yeah. Anything that Shopify does, people seem to be taking with a positive light, at least over the last 5 years.
All right. Any other things financial markets wise that excited you? Any companies you're looking at today? Wait, Instacart IPO. I got some information on this.
Okay. Give me
some. Not sure what the expected valuation is going to be, but for those that don't know, Instacart filed their S1 to go public. They're actually called Maple Bear is the full company, which pretty bad name, but who cares? I guess everyone just calls them Instacart. They plan to trade under the ticker CART. Good ticker. They have more than 1,400 national, regional, and local retail banners, more than 80,000 stores that represent more than 85% of the US grocery industry. So the majority of grocery stores are saying, yeah, they're fine accepting Instacart orders. Gross transaction volume, though, has been stagnating over the last year. So it's been consistent growth in total transactions, so both active customers as well as average ticket. But now you're starting to see that basically flatline. It was up just barely a single-digit percentages in the most recent quarter, year over year. So that's been a headwind, but advertising revenue has really been growing. Now, I personally am I don't know if I like to see advertising revenue growing quickly for platforms like this, because it feels like kind of a last lever to pull. So with Amazon, everyone knew it was always there.
You could always do product promotions eventually. Airbnb, you could eventually do that. But even Brian Chesky is like, listen, yeah, it's obviously there and we could pull that lever if we want to, but it's the easy, that's the easy way to grow, is to basically pit these retailers against themselves and make them promote their products and give them, preferred spots or preferred placement on your app. I don't know. It's growing quickly for them, which I guess is a positive, but it just feels like an easy way to grow, I guess. But it's high margin, I imagine. So they are profitable, cash flow basis. It looks like a decent business. I know people that use it that love it, and it really simplifies their routes.
So expensive though. So damn expensive.
Yeah, I imagine if you're like a family and you've got a bunch of places to be, let's say you got kids, they got practices after school, you got to pick them up, you got to go to and from places to like get them there, and you just don't have time to make that grocery trip. You're willing to pay the extra $10 for the trip.
Damn.
If you don't think?
Well, I don't know. I guess I've never used it, but I've heard it's pretty egregious, but I guess I don't know for sure.
Yeah, I don't know. I see the benefit.
Well, sure, for sure. If you can afford it. What are Instacart fees? Let's look it up. All right. Blah, blah, blah.
Part that would frustrate me is the getting the orders wrong. God, that would just irk me.
Oh yeah. Well, yeah.
Is this a fine replacement? It's like a totally different bread or whatever. Like,
I used it in I used it when I was in out of the country in a cheaper market, and it's so annoying when I didn't have a car. Like it's so annoying. Yeah, it's tough. Let's see. Well, looks like they're very complicated fees, so I guess it's not great to just read those off on a podcast, but yeah, it's an interesting business, but I don't think I don't think this, how big can it get? Because you have to be fairly wealthy to use this.
No, I don't think you do. I think you can get pretty big. I really do.
All right.
There's
well,
a
let's
lot
see.
of people that use this purely for the convenience factor. I mean, okay, how many people order DoorDash that friends do they have to be
Not that-
extremely wealthy?
No, but
Like
I
all
mean,
my
not that
friends
many
use
order it.
DoorDash
Or
or Uber Eats or something. There's always these promotions, always these discounts. To me, it's just like,
well, sure, if they're going to discount their way, but I'd say, excluding that.
I knew you'd have a gripe with this. I just knew the consumer habit you wouldn't like. But I'm telling you, people love this service the same way they love DoorDash. It's just like, maybe it's out of laziness, but the convenience of having it delivered is nice.
Yeah.
And it honestly makes more sense to me than like a DoorDash order, where it's like, because the DoorDash order, you're potentially paying, 50% of your food costs to have it delivered to you. Whereas grocery, you can make a big grocery order and it's much smaller percentage.
Yeah. No, it makes more sense than DoorDash for sure, at least in most cases. I just don't know if it's going to be that big of a business. I really don't.
I just feel like a lot of people went from thinking these marketplaces were in my experience, we watched a lot of these marketplaces VCs were basically subsidizing the cost for customers, and there was just all this really unprofitable growth.
Right. $2 billion venture rounds. Yeah.
Right. And I just thought there's no way any of these could be profitable. But watching Uber do it, I'm starting to think that whoever the category leader is, they can be profitable if they choose to.
Yeah, I agree.
So I think DoorDash can do it. I think Instacart's really the leader in grocery. I think they could probably do it.
I'd be more hesitant on DoorDash because I think, well, here's the interesting part. They're all trying to get into grocery now. DoorDash is trying to get into that. So I wonder if there's going to be a price war there, but we'll see. We'll see what happens. I don't think my gripe would be on grocery delivery that it's going to be unprofitable, because it makes sense how they can be. Yeah, you can just change the knobs on what things cost and you can make it profitable. I just would worry about how big this thing is going to get.
It is starting to mature, starting to saturate.
I mean, you just said that
is kind of coincides with the fact that discounts are starting to burn off.
Right. And you mentioned the advertising thing. I think those are two hints. Also, you mentioned the GMV was stagnating. Or is
Yeah,
that
just transaction volume. It's stagnating. Yeah. Part of that was transaction value has come down a little bit. Just I think people are buying less at the grocery store with the kind of inflation. Or they're buying less items, maybe trading down in quality, but it's still gonna be, I think it grows just slowly. And
Yeah,
there's
I
a
can
lot
see
of
that.
adjusted numbers in this S1, which kind of bothered me, but
Yeah, I will say I haven't read this S1. So if I do read it, maybe I'll change my entire opinion. But we got a comment here from Julius Caesar, which I love that name. Says Uber is in the best position compared to DoorDash. Ryan, agree or disagree?
I would have said yes, probably like a year ago, but free money has pretty much gone away, right? For these companies. And DoorDash still is growing transactions because I think okay,
They
this
had
is
the
really,
consumer they
really
have the habit.
anecdotal, but people just go to DoorDash now. They don't really think about Uber Eats. They just
My
choose
my
DoorDash.
my anecdotes would be that everyone hates that I know hates DoorDash. Not just the food delivery in general because it costs so much. But
But I don't know.
they don't
DoorDash just
use
has
it.
the brand notoriety.
I live with 5 people I've lived with 5 people for 5 months now, and we haven't had one DoorDash order.
Really, I've had
Yeah.
quite a number of DoorDash orders to our place.
All right, let's look at their
It
numbers. Let's
depends.
look at their numbers. Okay.
Might be a little more expensive the further out of the city you get.
That's true. That's very true. All right. Let's see. Last quarter, revenue up 33%. GAAP gross profit, $951 million. Contribution profit, blah, blah, blah. GAAP net loss, 172 million. It's improving, but still a loss.
Yeah, I don't know. It's probably
it's
not
like, okay,
touchable.
like it's fine, but like you're not going to go out of business, but well, why does that excite me?
What do you think about this ARM IPO? $52 billion.
Yeah, I was shocked at how slow growing this thing is and the price people are willing to pay for. I don't understand why everyone's so excited about this. But
Are people that excited?
yeah, I mean, SoftBank was, right, 5 years ago. Didn't they pay like the same amount for it or just a little bit less?
They paid 64 billion valuation for the remaining stake like 3 weeks ago.
Or no, they
Sun
bought out.
sold-
They bought out from the Vision Fund so they could pay the Vision Fund investors, which is a
Sun bought
little bit.
ARM from Sun so that Sun could dump the bags on retail.
Maybe he's a let's say complicated figure.
I remember reading a quote from the Wall Street Journal, and Sun basically said, like, after they acquired the majority stake in ARM, he said he was so excited because this was his destiny.
I was like, what do you mean, dude? The numbers don't look that good. Like, it's a very profitable business, but I mean, right?
I think it was doing $500 million in cash flow annually.
God, that's expensive.
52 billion. Yeah.
Yeah,
shit.
that's expensive.
It's not a cheap business, and it's not young. Like, just because they're plowing money into R&D doesn't mean like growth is guaranteed. The business is growing pretty slow.
Yeah, I wonder if Nvidia got lucky that their acquisition of ARM from SoftBank got blocked. Honestly,
Yeah, I bet they probably are a little.
I bet. Look, there's gonna be someone out there that's like, no, you don't understand the strategic rationale. This is gonna help them dominate the industry. It's okay, great. They overpaid.
Yeah, I read this one quote. I think it was from Doomberg or whatever. And it was, I can't find it, but it was like his son bought a stake from Sun, then paid it extra. Then Sun paid more to buy more from Sun right before Sun sold 10% to shareholders in the public markets.
Yeah, just to mark up that stake. It's quite interesting, I would say.
Yeah, they've never had any Bad. Never had any examples of that going wrong. Have they?
Yeah, yeah, not with them, not recently. No shady transactions that are a little bit of self-dealing. We would never do
Cough,
that.
cough. Adam Newman. Cough, cough.
Yeah. Okay, here's one that I thought was interesting. And there's two things that maybe don't seem related at first, but I think are going to be very related this decade. This is kind of a burgeoning thesis for me. That's not going to be an investing one, but just more of a hot take. So we had yesterday Sean Fain, the United Auto Workers president, go on CNBC. He's been doing a media blitz. They're maybe about to strike, trying to get better wages, as a lot of the, Ford, GM, Stellantis are getting, they're earning pretty strong margins right now, and the workers want to get those wages up. At the same time, I just read an article in the Wall Street Journal about BYD. They're exporting a lot of stuff to outside of China now, mainly to Europe at first, not really in North America yet. No one has seen these. But the reason they've dominated, and what I think is so interesting, and here's the quote from the Wall Street Journal: BYD's formula for success in its home country could likely work outside China. UBS estimated that the car maker has a sustainable 25% cost advantage over other legacy automakers. This includes Europe and North America. The bank said the BYD seal carries a similar profit margin to mass market internal combustion engines globally. And blah, 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 cost advantage. The key there is that 25% cost advantage. That's huge. And I think that BYD could really go on a tear here, exporting cars, plus the other Chinese ones this decade. What do you think? Especially the electric vehicles. Yeah.
Unless there's export bans of sorts.
Yeah. That could throw a wrench into the mix. But what's
You see
interesting
the
is
stuff
that
about China not allowing government officials to use iPhones anymore.
I did see the headline. I was going to read it today. It's a lot of tit for tat stuff. Yeah.
Yeah.
I could see that happening. Yeah, for sure. Although I could see that happening, especially in the United States. But what's interesting in that regard is that Tesla has a lot of their manufacturing based in China, which was a very smart move because it lowered their costs, right? Similar to a BYD. How are people going to look at that? Right? I think, are they going to be able to thread the needle? It's a very fine line there of, okay, you have these, right, the Chinese auto plant there. Is it the same as BYD exporting it? It's maybe they're going to ride the line and Musk is just going to ride out and be the, you know what I mean? The ultimate victor there. But I find that to be a little bit of a complication. And I think I would be very optimistic on BYD if there wasn't the China factor. What do you think?
What are your thoughts on unions in general? Because
as an investor, from an investing perspective, stuff.
Yeah, I agree. Because part of me thinks I'm sure people in the union feel motivated to create the union because for good reason. It's not like they're just doing it because they want to shoot the company in the foot. But it really does make it tough as a shareholder. I think you're seeing that probably with UPS.
Yeah.
I think it's tough. UPS shareholder, I'd be a little worried.
Yeah. UPS, FedEx, the American automakers, the American airlines, not American Airlines, but all the United States based airlines, they all have, if they start earning a good amount of money, those unions ask for raises, which is their right to do. And typically they can succeed. As a shareholder, I think you have to factor that in. Now, sometimes you can balance it out, but if profits start surging, I think with those businesses, you may want to have a margin of safety there, I think, or be a little bit cautious as a shareholder doing any sort of projections.
Yeah. The other thing is, I think unions do well because of what they're called. Like, calling it a union just makes it feel like it's this very camaraderie based, like we're working together to stick it to the man. But in reality, it hurts a lot of businesses. And we just saw it with that logistics company, Yellow.
Right.
It killed them.
It's a fine line. Yeah, you have to balance. Like we talk about a lot on the show, the most sustainable businesses are the ones that balance the needs of all stakeholders. Because without a lot, if you lose one of them, a lot of the times the business falls out. And if the workers take too much profits, the business isn't going to be there anymore. So it has to be a balance for sure.
This is where it helps to have like a MasterCard or Visa model where you really only
Oh,
need
yeah.
50 employees.
Well, here's one that I want to talk about. And I will say, as a disclosure, we don't own the stock, but this is one we would like to own at the right price. And it is the Airbnb bust that reminds me of this, right? Where people are talking about this. There could be some property managers that go under. It seems like a lot of them may be over levered. There's a lot of new regulations coming in. We just saw the thing in New York City. However,
explain what it is for people that don't know.
Oh, okay. Yeah. So basically, a lot of people during the pandemic, there was a little bit of a boom in the demand for Airbnbs, right? And a lot of people said, hey, look, if I buy this house or rent out to this apartment, I'm able to put on Airbnb. There can either be a little bit of an arbitrage, or I can take a cheap loan, buy this house, rent it on Airbnb, take that cash flow, get another loan, blah, 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 scale up this business. And then when some of the demand fell off, a lot of these businesses have seen prices decline. Airbnb is trying to increase their total supply, which has brought down the average daily prices. There's a theory out there, could be true. I think I could see it reasonably be true, that a lot of these businesses or small businesses, these property owners, are going to go bust over the next year or two, maybe even an extended period of time. And the next logical step for these people is that Airbnb is going to go bust. But I think similar to Visa and MasterCard, Airbnb is above kind of the fray here, where it doesn't matter for Visa and MasterCard if 1 million restaurants in the United States go out of business every year, because 1 million are going to replace them. With Airbnb, I think it's the same thing there. And it kind of relates to that union aspect, where if you can be above that, right, and you don't have to worry about those things, it can be quite wonderful.
Yeah, maybe.
From a business perspective.
I think there's merit in the Airbnb, especially in cities, like the Airbnb model or the apartment rental arbitrage does hurt affordability.
Yeah.
Which,
if it's big enough. Yep.
If some of these other cities see what New York is doing, where New York is essentially banning, with some of the policies that they're putting into these new leases, they're essentially banning the ability to Airbnb your apartment. If other cities see what they're doing and they're like, listen, we have an affordability crisis on our end, we should implement the same things, then I think it's a problem for Airbnb. And I will say, I think it's fair that a landlord or a property manager can tell their tenants, you're not allowed to Airbnb this out, because the renter doesn't own the property. Like, you shouldn't be able to rent. You should not be able to rent what isn't yours. But I think for the state or the city to step in and say, you as a property owner aren't allowed to, and some of these rules were weird. It was like, you have to be in the property at the same time as the tenant if it's 30 days or less of a rental. For them to add those kind of rules, I thought that was kind of overstepping. But I don't know. Do you think that the Airbnb arbitrage model was creating an affordability issue, or is creating an affordability issue for renters or wannabe homeowners?
Okay. That's a great question. I think the theory makes sense, and at a large enough scale, it would, right? Because if you put an Airbnb on the market, it's taking out, one unit that someone could rent as a long-term renter. But I don't know if the numbers support that specifically in New York City, because if we look at the number of Airbnbs in the city, it's 40,000, and the 40,000 didn't appear overnight. It's been built up over many years. As of 2017, this is a number I'm just pulling off of some website. So again, take it with a grain of salt. It's probably not exactly correct. It said there are around 2.2 million renter occupied units. So I don't think it's going to have a material effect, because we're not taking all these Airbnbs away overnight. It's not going to move the needle. And I don't think it's causing the housing problem.
Yeah, I think you're probably right. Tyler,
second thing here. Wait, here's my, okay. Second thing is, if the supply gets restricted enough, it actually will benefit Airbnb, because prices on Airbnbs are going to go up, which really helps with their margins.
Yeah, it could be. Tyler in the comments says banning Airbnb solves the housing crisis about as effectively as banning hotels does.
I'd agree. Yeah.
Yeah, I bet it's like big hotel Marriott lobbyists, like these Airbnbs, they're causing a housing crisis.
Yeah. No, I honestly would not be surprised if the hotel lobbyists were the ones planting this seed. Would not be surprised.
It is. Yeah, it's interesting. I always think it's funny that there's such big affordability issues when there's so much open space in America. Like if you drive outside of the coast, every time I do that, I think I'm blown away that it's so hard to afford homes. Like everyone just consolidates into this like 10 square mile radius.
Oh yeah. The Seattle area has so much potential. I mean, the East Coast is a little more dense, but the West Coast specifically has so much area to develop, and it wouldn't even take up that much space comparatively to how big the areas are.
Especially in a world where hybrid work is potentially more common, or even remote work. I know I'm kind of a remote work skeptic, but relative to pre-COVID, or just in general, I think remote work over time is going to be more and more common. I would be long rural areas,
Yeah.
or
Sure.
the price of land, I guess,
Yeah.
in middle America.
Yeah. Well, maybe not middle America.
Which maybe I should just be a Dollar General shareholder then.
Yeah, that I was going to say, I was thinking about Dollar General. Maybe that makes sense. The thing is, everyone still wants to live in New York City, apparently. I guess. Doesn't make sense to me, but hey, it's what they want.
It is funny that it feels like there's a lot of people that live in New York because they feel like they have to.
Yeah.
Because they have a job there or something, and they want to get out. And then there's people that are like clamoring to get in there. That I don't understand the appeal. And you know what?
Maybe for a few months.
Yeah,
I could do it for a few months, maybe, but
I'm pretty sure like 3 or 4% of our listeners live in New York. I was looking at the little demographics, but I don't get it. I don't get, like, I know it's an exciting city, but I don't, paying that much that's the part I don't get, is the affordability stuff.
I could understand it for a few months, maybe a year.
Yeah.
But yeah,
that's probably true.
Do you think, here's running back to Airbnb and Airbnb bust, do you think that governments have the ability, given how much money they make their supply, which is the hosts, and how popular they are among consumers, do you think governments have the ability now to actually ban Airbnb without a huge backlash from both constituents there?
I don't know. And I kind of see it on both sides, where it's like, if this is actually causing some sort of an affordability issue, the Airbnb model, and you have a growing homeless population,
right?
I can see the government incentive to want to intervene. But it feels too small for that to be happening right now. And I do think in general, I'm a fan of this kind of stuff being regulated at the private level. So having apartment owners say, no, you can't rent out your Airbnb, like giving them the ability to say that, which I think most apartments can already say that. I prefer that, but there is, kind of this bit of a growing homelessness crisis. So I don't know. I understand this incentive from big cities.
Yeah, I totally get that too.
Anyway, I would still be long Airbnb if it got to the right price.
Yeah, I don't think this is a concern, especially when we saw the Doomer Rich Dad Poor Dad guy say that. Did you see that? I saw you like that, the tweet I had.
That guy is just the worst.
What happened? The boomers need to get this guy in line, because his book was solid, and then wow, I'm going to sell you this course.
He has. Yeah, honestly, if you're starting out, like if you're just getting interested in finance for the first time, Rich Dad Poor Dad, not a bad book. I'm glad I read that before I figured out who this guy was, because now, if I saw him first calling, like, what is it, 100 of the last 2 bear markets, I wouldn't have read his book. So
True.
it's I don't know.
Yeah, it's wild how
It's like perma bear, just perma bear. Every 3 months, he calls a new recession.
yeah, it's great. He is a little bit of an attention hound. I don't underestimate the saying "never meet your heroes" because you do seem to get disappointed.
Michael
A lot of
Burry,
them.
in some way.
Yeah. Well, I was thinking that too. Yeah.
Yeah. I don't know. Yeah, maybe it's right. Just I don't know. I think Buffett would be just fine.
Yeah. Yeah. Of course. But we can't disparage him.
Yeah.
All right. Anything?
Our saving grace. Yeah. Oh, and happy late birthday, Buffett. 93. Still puttering around down there in Omaha. Good for him, man.
Good. Great.
What's the combined age now? Him and Charlie.
Be
Like 102 almost. Or sorry, 202.
no.
Isn't
Not
Charlie
190.
99?
Yeah, so it'd be 194
No, right?
or 190.
Oh, yeah, you're right.
Yeah. Or no, sorry. 192 minus one, not plus one.
Yeah. Well, slowest aging executive team.
That's right. That's like what they like to say.
Yeah.
Anything else? Oh, we saw Huawei came out with a. This is way out of our wheelhouse. I was trying to write something up on it, but the Huawei came out with a new phone with like a 7-nanometer 5G type chip thing. Could impact Apple. I don't think that's something we really can discuss. But
yeah, short Apple. No, it's just. I think I'm going to ban myself from talking about semiconductors, just as a whole. Like every stupid take I have, I hope people don't listen. I don't know. It's been kind of a quiet week, to be honest. The markets keep going down. I kind of like it.
Yeah, I do like that.
I do
like that. What are we looking at today?
I'm growing more and more intrigued by treasuries. Do I sound like a boomer?
Yeah.
a doomer boomer. I don't know. I mean, 5.5%. Some of the companies, the market's overvalued except for all the companies that we own.
Oh, yeah, of course. Okay, here's one. Maybe this is fun to close things out. I don't know if we can come up with any on the spot. So there's one from Acquirers podcast, Tobias Carlisle, that had the last time the NASDAQ Russell 2000 traded here was March 2000, the very peak of the dot-com bubble. So it's the NASDAQ 1000 divided by the Russell 2000. So the higher that number, the more the NASDAQ 100 has outperformed the Russell 2000. And the Russell 2000, I believe, is just a small cap index. So what he's basically implying there is that small caps could be undervalued. There could be some opportunities there. So our friend Sinstock Poppy said, what's your favorite small cap idea that has the potential to compound earnings at 15% or so, but that is also a victim of the rotation out of small caps, i.e. multiple compression despite strong historical and forward growth? Anything come to mind there? One from our portfolio would be, it's a little big. It's too big. I would say Ally would still get fit in there, even though it's not in that small cap range. It's more mid cap. But again, definitely do your own due diligence on that. That could be dangerous as a financial. Something I think for the listeners maybe to think about. It could be some opportunities in that range for people. But any thoughts from you, Ryan?
I'm a little reluctant to talk about anything that's too small in our portfolio, just because.
Well, of course,
I don't want us to be, because we're such influential finance figures that don't want to dictate the price. I don't know. Something that I just feel like every time I look at a small cap company, I think like, wow, it's a great opportunity, but this business is just horrible.
What about Revolve Group?
Are they that small?
Yes, I think they're very small, and stock's down a lot. Let's look at the PE. Just do a quick PE check.
I think I'd rather own Ulta.
Yeah, it's at like 23. The P's at like 23, but I mean the potential, the market cap's below $1 billion, and I believe if Revolve hits their margin, they could have a margin inflection that brings it higher. But yeah, I see what you're saying. Ulta could be a better.
Anything that is in the fashion retail space,
It's hard.
I just got to toss it out.
Of course, a lot of comments here. Rick's Cabaret. Yeah, of course. Everyone loves that one. How's
Yeah.
that? Let's check out. That was a fan favorite, not from our show, but specifically FinTwit, the finance world, for a while. See how the performance has been.
Rick's,
Down
RCI
basically
Hospitality.
RCI Hospitality. Yeah, down basically flat over the last year. Yeah, it's kind of had a little. Hey, there could be opportunity there. Who knows? Don't know it well. Interesting.
Oh, yeah, sure.
Yeah, I don't know. Oh, I don't know anything about that. Honestly,
I know the company well. I read a lot.
Yeah. The yeah, no, they're not even in our area. They're in like the south, from what I remember. From what I
Yeah.
remember. I don't know that for a fact. Okay, we got a question here that can maybe close us out. Do you guys have any thoughts about LVMH? Well, great story, great history. The guy that runs it cannot pronounce his name, but he has done fantastic.
Basically, the Logan Roy. Really,
yeah, they're doing the succession
Sons
planning.
are just duking it out for succession.
He's like the Joker in the Dark Knight. He's breaking the sticks, tossing out. When do you guys get out of here? It's just too big for me. And in an industry I don't understand. So I think that's that. And I worry about succession.
I like Bernard Arnault. Is that how you say it, right? Arnault.
I think it's something like that.
I like him. I do think it's a little too big.
There's too much Louis Vuitton out there. I see too many
bums.
I see too many bums wearing Louis Vuitton. I'm sorry. I think that's honestly it's a risk for me.
I don't know if the brand's been diluted down, but I just don't. I like the area. I like the category of luxury. I just think Louis Vuitton's too big. Honestly,
I like Hermes and Ferrari better. Obviously at the right price.
That's the other thing. It just always feels too expensive, which maybe that's just I should get over that and forecast better growth. But it's just not in my wheelhouse. It really is.
Yeah, and like you have to predict the Chinese consumer market, which, man, I don't want to do that.
And everyone has been dead wrong on that for the last 2 years because everyone was predicting the China recovery and it just hasn't been there.
Yeah, it seems like whatever. It's just whipsawed from back and forth. But hey, stock's been down. If you like it, you like it. But
Tyler says it feels like ironically they could save the brand by bumping prices by 20% overnight.
True. I guess they still have that, but I do worry about the balance, right? The balance. It's almost like they
could save the brand but hurt the financials.
Yeah, it's more of like the bigger you grow in luxury, it's one of those balances. I did read the luxury strategy book, which I thought was pretty good. A little bit, it could have been shorter, I think, but it was a French guy kind of elaborating, and he was very, let's say, you like the French a lot, which I thought we didn't need to have in that book. But the interesting thing is that, it's hard to describe, but yeah, the true luxury brands are the ones where the customers want them to raise prices because it increases the exclusivity. I worry, and again, I'm not an expert on Louis Vuitton, but I worry that unlike a Ferrari or an Hermes or a Rolex, they are straying a little bit away from that.
I agree.
We should get someone on to talk about LVMH though. Could be interesting.
Oh, you know who owns it? Our friend. I think he does. Let me double check here.
Well, don't need to. Either way,
we'll get someone on.
We should find someone to get on to talk about it because it's not one that we're going to probably cover on a not so deep dive. It is too out of our wheelhouse. And it looks like we have some stuff that says love the podcast. Well, thank you everyone. I think that's going to be it unless Ryan can find the person. We're coming up on the hour mark here. So for anyone that's listening, these are live on Thursday mornings on YouTube. You can watch them on YouTube. You can also listen Sunday mornings on your podcast player. We don't care how you do it, but if you want to join live, you can ask us questions, which we think is fun. We love the discussion there. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. Thank you, everyone, for listening. I think Ryan is frozen, but that's perfect timing because I just ended the show, and we'll see you next time.